Did you know that when you go to purchase a home, you have to have a lot of money up front out of pocket that you will be spending when you sign on the dotted line? And I'm not talking about your down payment, I'm talking about closing costs. So if that's a brand new term and you have no idea what I'm talking about and you're thinking about buying a home, then you absolutely have to pay attention to this video where I'm going to talk to you about all the things closing costs. So stick around. Hey everyone, my name is Danae Hewitt. Thank you for tuning in this week. So let's talk about closing costs and what they are, how much they might be when you go to purchase your house. Like I said when I first started this video, is that this is not your down payment. So if you're saving up for a down payment, whether it's 3%, 5%, 20%, whatever that number is for you, you also have to factor in thousands of dollars to go towards your closing costs. And as a general range, we tell people that they're anywhere from 3 to 5% of the price of the home. Well, that could be a big spread. I mean, if you're buying a $300,000 home, that's anywhere from $9,000 to $15,000. That's a big difference. The closing costs are going to consist of lender fees, title fees, third-party fees, and setting up your escrow accounts. Let's dive into each of those. Your lender fees. You actually have to pay your lender for working on your loan. You have to pay that mortgage company to give you the loan for your house. So there's going to be things that we call an origination fee, which is usually 1% of the loan price, as well as other fees that lender might charge you. They're going to charge you to pull up your credit report. They're going to charge you an appraisal fee, and that's to find out what the value of the home is. And they may charge you courier fees, or there just may be some other fees that mortgage loan officer is going to charge you. So what I recommend to all of my buyer clients is to don't reach out to just one lender and use that one lender. I highly recommend that you reach out to a couple of different mortgage loan officers and you get that loan estimate from them. And you look at that loan estimate with a fine-tooth comb. You want to see how much they're charging you to buy down your interest rate. Maybe you're doing that. You want to know how much all these little fees are. You want to know what that origination fee is so that you can actually do an apples to apples comparison to make sure that you're going to be working with the right lender that is either going to save you money up front if that's your goal, or if they're the one that's going to give you the interest rate and maybe they don't have a lot of fees right now. I don't know. But definitely look into a couple of different lenders. But all of those fees, all of that work, you're not paying for it up front. You're paying for it the day that you sign on the dotted line to buy those house. So that's the first area of your closing costs. The next set of closing costs are going to be your title fees. So what happens is when you buy a house, title is in the name of the current owners, and it has to be transferred out of their name and into your name. So there's a lot that's associated with this. What the title company does is they make sure that there is no cloud on title, that there are no liens on the title policy before it gets transferred to you. Now, a lot of times there's a mortgage lien on there that the sellers currently have, but your loan is going to pay off their loan, and that will be eliminated at the closing table. But they also make sure that there's nothing funny happen, there aren't any heirs to the property, and I do a whole video about what the title company does. But all of that research comes with title insurance, because let's say they make a mistake. Oh my goodness, they're humans, they make errors, or things may pop up on title after you purchase the home. Now, that is so far and few in between. I mean, I'll just tell you that right there. But you have to have insurance for that. And if you use a lender to purchase the house, that lender is going to require that you have that insurance. So you can't be like, well, no, I'm not really an insurance person. You are when it comes to title insurance, according to your lender. But along with those title fees, they actually have attorneys that are going to be reviewing all of the documents, so you have to pay their attorneys. You have to pay the escrow officer that is preparing all of the files as well. There are recording fees with the city and the state. The deed needs to get recorded, for tax purposes. All of that stuff comes at a cost to you. And again, that is due when you sign at the closing table. The next part are third-party fees, and this may not apply to everybody, but the big third-party fee is going to be an HOA. So if you're buying a home in an HOA, again, that HOA is in the name of the sellers and it has to be transferred to the buyers of the house. And guess what? There's a cost associated with that. And guess what? Some of these costs are absolutely ridiculous. I've seen some HOAs be so stupid expensive to do it, and they charge all of these stupid fees. I mean, I am putting that out there. And some of them are not very expensive at all. Okay, it just depends. What I like to do when I am listing a property that is in an HOA, or if I'm helping a buyer purchase a property in an HOA, I want to know what those fees are. Typically, we see those fees be at the seller's expense, so that would be a part of the seller's closing costs. But if the fees are really high, then as a listing agent, I want to tell my seller clients and say, these fees are really high. When we get an offer, we need to negotiate with that buyer's agent and those buyers and say, split the cost, something like that. So for example, there was a fantastic subdivision called the Wellington Estates up in Flower Mound. And those HOA transfer fees, let me tell you folks, can be anywhere from $1,100 to $1,600. What? Plus the HOA resale certificate, which is another $375. Won't get into that. But you're looking at close to, it could be up to $2,000 to transfer this money over. So specifically, I have some seller clients, so I told them that these fees, that we're going to try to negotiate that, which we absolutely did. We were able to get the buyers that are buying the house to pay for about half of those fees, so my sellers didn't have to absorb that entire cost. Let me tell you about another community called the Harvest Community up in Argyle. I mean, it is the cutest community. Let me tell you. I mean, there's so much to offer there. They have communities and like a bajillion pools, and they have concerts in the park there, and they have spaces that you can rent. And they even have a full-time farmer on staff that will grow vegetables for you. I mean, you have to pay him, but I mean, okay. I mean, it's absolutely amazing. So that HOA, get this, when a property does sell and transfers from the seller to the buyer, they charge a 0.25% community benefit fee and also a $400 community reserve fund fee. What? So I was listing a property in that cute community, and I called and I find out, and I'm like, what are these numbers? What is this? And that 0.25% that I just mentioned is 0.25% of the cost of the house. Okay, so if you're selling the house for $350, 0.25% of that, all right? And so I told my sellers, I said, when you leave, you are not going to reap the benefits of these fees because those stay within the community. They go into two separate reserve piles of money. You're not going to receive those benefits because you're moving out of the community. So we negotiated with those buyer's agent to say, hey, these are community investment fees that you will reap the benefit of, not my clients. So we asked them to pay for it, and they did. So it's really important that as a buyer's agent or as a listing agent, or when you are talking to your agents, make sure that you know what those third-party HOA fees are, because those are also included in your closing costs. The last part of your closing costs is going to be setting up your escrow accounts. So let's not get too technical into this, but you're setting up your escrow accounts basically because you're going to have one lump payment when you pay your mortgage every month. But your mortgage is going to consist of four things. It's going to consist of the loan amount, the interest on the loan, homeowner's insurance, and property taxes. Now, we don't pay our property taxes every single month. What that escrow account is, it is saving up money to pay your property taxes at the beginning of the year for the previous year. And you don't even have to think about saving money for your property taxes because it's already going to be set aside for you and going to be paid on your behalf. And you're just putting into it on a monthly basis. So you're setting setting those accounts up. And you're also paying for your homeowner's insurance up front. We don't pay our homeowner's insurance every month, we pay for the bill annually. So you're putting money into that account so that it can be paid for that next year right up front. So when you buy a house and you're closing on it, depends on the lender, but you may probably pay your homeowner's insurance for the rest of the annual year and then for all of the next year as well. It just depends. Or it may be a 12-month time period, maybe a 14-month time period. So it just kind of depends. So that's definitely a question that you're going to want to know is how much of my homeowner's insurance is actually going to be paid up front when I buy this house. As you can see, when I said roughly your closing costs can be 3 to 5%. So now you can see how that can build up. And I don't want that to be sticker shock for you. I don't want you to be like, oh my gosh, I had no idea I had to do this. Whenever I work with the clients that are choosing to buy a house, I have a fantastic app that I use with a fantastic title company that I use, and I will link that in the description below. I work with Capital Title, and they have provided a closing cost estimate app for you, because right, there's an app for everything, for buyers and for sellers. So you can literally type in the address and it'll pull up a really, really close estimate of what your property taxes are. You put in the home price, you put in how much down payment you plan to put on the house, whether it's a percentage or an actual dollar amount, and they calculate approximately what your closing costs will be in addition to your down payment. So I like to provide that to my buyer clients so they know maybe roughly what they have to pay out of pocket when they buy a house. And on the flip side, I provide it as a net sheet to my seller clients so they know approximately what they're going to net, because their closing costs are a lot more money than they are if you're buying a house. I would love to know in the comments below if you learned something new today. If you're a first-time home buyer and this is like, phew, what are you talking about, brand new? I would love to know in the comments below. And if you're thinking about relocating here to DFW, usually on my channel, I am out and about, boots on the ground, showing you homes and what you can get for your money, but it is over 100 degrees here in Texas, and I refuse to be outside if I don't have to be. So in a couple of weeks, I will be back on the ground, showing you neighborhoods and what you can get for your money and talking about these cities, these fantastic cities that we have here in the Metroplex. All right, in the meantime, watch this video. It's going to be a great one, and we'll see you next week.